Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. It has been very challenging for the Australian dollar to take on the top side of the range as it posts now a hanging man. There has been many conflicting patterns and signals in that. The fact is that as the market was portraying a bullish stance all the way through here, the divergence come through on the RSI and also on the MACD, which still currently holds to some degree. Now posting a hanging man does suggest that the market is struggling at this top side of the range. There's a few people out there looking for a 74-cent target. I'm a little bit skeptical of that. I feel the market found a top last night at 73.70. So let's see if we can pull back. And if we get a cut of 73.15, is the trigger to support the hanging man and also the divergence, and to a target back to 72.25. Looking at the dollar against the euro, or the euro against the dollar, is the dollar index, which measures the greenback strength against a basket of 6 major currencies, has only dropped 10 pips, that is, from 92 figure support, and is trading at 91.90. The euro, on the other hand, hasn't really shown any follow-through. Unlike before, when the market surged up towards 120 on the break of this level, around 119, the market is not showing as much interest as we saw before. A bull trap? Could be. And if we do see the dollar index, which measures the greenback, as I said, with the euro at 57.6, could see a pullback for the euro to around the low 118s, which are still just about holding in there at the moment because we haven't seen a strong break to the upside. Dollar yen hasn't really traded in any direction since the rebound and posting the bullish outside range day and also from the inverted hammer. Still, the market is, from what I can see by the technicals, a little bit weak to the bull case, but still could reach the 105 before turning around, with this downtrend still holding relatively firm. We are moving into the Thanksgiving in the US, and it will be closed in observance of that. So the volume will be a little bit thinner for all markets, and we could see a little bit of volatility when it comes to some of the markets, especially sterling, as we're still looking at the headlines and at the moment still haven't come to a decision. And therefore, at the present, let's keep an eye on this trend. It is holding roughly around 133 figure 15, and if we get a strong break of that, opens way back to 131. Until then, though, I'd rather sit neutral and just wait for the break or the opportunity. With the whipsaw price action that we've recently seen in sterling yen, the market is a little bit hesitant to take on the challenge at 140, and we could still see a break to the downside if we fall under 139. This would reinstate the downside back to the 137 target. Looking at the weekly chart, you can see taking out the level of 1,848.52 has given us a target of 1,755 to 65. Little bounce so far, if we look at the shorter term picture, so from weeklies to dailies, is that the market is struggling and therefore could still see that down test before opportunity, maybe from that 175565 area. Wrapping up with oil, well, the market's still holding to an uptrend after breaking the level of 43.80 and looking still towards potential target of 46.250 as a wide range, but somewhere as a measured move. The reason why I've got that is because the RSI is extremely overbought. So we could see a stab or a spike and then see a drop back towards the bottom side of the range around 43, where the trend line is, that is, at 43, 30, 45. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and hope you enjoy the rest of the day.